What is up, everybody? Welcome back to the Guru Crypto Garage. It is Wednesday, March the 4th, and tonight I need you to pay attention because while every news channel on the planet is screaming about bombs and burning oil tankers, Bitcoin just did something that should stop you dead in your tracks. It broke out, not a fake out, not a wick, a clean break out of a month-long descending channel. Took out 69,000, took out 70,000, sitting right now near $72,000, while bombs are literally dropping in the Middle East. I am going to say that again. The world is on fire, and Bitcoin just broke out. Tonight we are unpacking all of it. The war, the breakout, the one number that explains everything. The ETF machine quietly swallowing supply while retail panics. The tariff bomb that dropped today that nobody is talking about, the Fed with no good options, and what smart money is actually doing right now versus what the media is telling you they are doing. Before we get into it, do me a favor, hit that like button right now. Seriously, smash it, hit follow, hit the bell, and share this with one person tonight who needs to understand what is actually happening. Because in this garage, we break it down so it is not just the suits on Wall Street who get it. Your guy at the barbershop should understand this. Your cousin who thinks crypto is a scam should watch this. Share it. Let us ride. The Strait of Hormuz. Think of it as the world's most important fuel pump. 20% of the planet's daily oil supply flows through a channel 21 nautical miles wide at its narrowest point. Right now, that pump is effectively shut off. The United States and Israel launched coordinated strikes on Iran under an operation called Epic Fury on February 28th. The supreme leader is dead. Iran responded by closing the strait and targeting commercial vessels. Maersk, the world's largest container shipping company, suspended all vessel crossings, not just Hormuz, UAE, Iraq, Kuwait, Qatar, Bahrain, Saudi Arabia, the entire Gulf pit lane pulled. Over 150 oil tankers anchored in open water right now, like cars backed up at a red light that will not turn green. Brent crude spiked 13%. Natural gas in Europe nearly doubled in a week. And today, Treasury Secretary Bessent confirmed Trump's 15% global tariff starts this week, not next month. This week, global oil supply shock and a global trade shock landing simultaneously. That is not one flat tire. That is a blowout at 200 miles per hour with no spare in the trunk. And here is the kicker. ISM services printed 56.1 today, highest since November 2022. ADP payroll 63,000 against the 50,000 estimate. The economy is running hot while everything around it is on fire. You see the problem the Federal Reserve now has. They cannot cut. Inflation is about to get hammered by oil and tariffs. They cannot raise either because you do not hike into a war shock. The Fed just drove into a ditch with both doors blocked. March 18th rate decision is going to be the most uncomfortable press conference Powell has ever given. Paralyzed. That is not an opinion. That is the math. Now, here is why none of that killed Bitcoin today. $1.7 billion is why. $1.7 billion flowed into U.S. spot Bitcoin ETFs since February 24th. $1.7 billion in roughly a week after 5 straight weeks of outflows. After the media declared crypto dead for the 400th time, the institutional machine quietly turned back on, and it has been running ever since. Yesterday alone, $458 million poured in. Not one fund saw money leave. 0 outflows across all 11 products on a day. The Dow is down 1,200 points. Today, BlackRock's IBIT added another $322 million in one day. From one fund. Now, here is what most people miss completely. ETF inflows do not immediately pump the price. The authorized participants, the big market makers, can short ETF shares and delay buying actual Bitcoin on the spot market. So the ETF grows, but the spot buying gets delayed. This is why Bitcoin sat at 68,000 for days while hundreds of millions flowed in every session. The demand was real. The spot market just had a lag. Today, that lag cleared. Bitcoin ripped through 69,000, through 70,000. The channel broke. Spot buyers caught up and leveraged traders piled on top. That is your mechanism. But here's the contradiction I need you to sit with. While ETF buyers are loading through BlackRock and Fidelity, the Binance whale ratio just hit 0.64, 9-year high, 8.8 billion in whale deposits to Binance, highest since early 2022. Two armies, ETF buyers removing Bitcoin from liquid supply into cold storage permanently. Spot whales shipping to Binance to distribute into the rally. This is why 70,000 kept acting like a ceiling. Until today, when the ETF machine finally overwhelmed the sellers. Saylor confirmed 3,015 more Bitcoin acquired for $201 million. Total holdings now 720,737 BTC, 3.4% of total supply, 13 straight weeks of accumulation, underwater on average cost, not selling. And the number nobody in mainstream media touched today, $1.2 billion fled Iranian exchanges in 4 hours after the strikes began. Not to dollars, not to gold, to Bitcoin, because when your country is at war and your bank might be sanctioned tomorrow, Bitcoin does not ask for ID. It does not close on weekends. It does not get bombed. That is survival capital finding the network. ETH holding near 2,000 with rising open interest. Conviction building. Key level is 2,300 realized price resistance until it clears that it is in the waiting room. Solana fighting for $87 hold, or we talk about 77. Stablecoin supply 310 billion parked on the sidelines. That is not exit capital. That is a loaded magazine waiting for someone to call the shot. And the trap that is forming right now is something every single person watching needs to understand before we get to what you actually do about it. Three things are happening simultaneously that should not be able to happen simultaneously. And the gap between them is where you either make money or lose it. The economy is strong. ISM services 56.1, ADP payroll 63,000 against a 50,000 estimate. The service sector is the engine of the American economy, and it is running at full throttle. Inflation is about to get worse. Every ship rerouting around Africa adds 2 to 3 weeks and hundreds of dollars per container. Hapag-Lloyd already slapped a $1,500 per container war surcharge. Oil at multi-month highs. And Besson confirmed 15% global tariffs start this week. Every single import into America just got 15% more expensive. That is not coming. That is here now. And risk is everywhere. Tankers getting hit by drones. Jebel Ali, the largest container port in the region, caught drone debris from an Iranian attack. Iraq is shutting down the Rumaila oil field because tankers cannot leave the strait and there is nowhere to store the crude. Here is the trap. Strong economy means the Fed cannot cut. Inflation means the Fed definitely cannot cut. War shock and trade shock together mean the Fed cannot raise either. They are sitting in neutral with the engine at the red line and the car is vibrating. March 18th rate decision is the most important event on the calendar between now and summer. Market 3 scenarios for how this resolves, because this is not a one outcome market. Base case at 45% grinding volatile chop, Hormuz contested but not sealed. Iran reportedly has only days of missile capacity remaining per Western officials. Oil pins between 75 and 80 on WTI. Bitcoin absorbs steady ETF inflows and holds 68 to 73,000. Nobody wins clean, but nobody loses catastrophically. Bull case at 35% rocket fuel. Diplomatic back channels secure Gulf passage in the next 72 hours. Oil drops below 70. VIX collapses below 15. A month of short positions get absolutely destroyed. Bitcoin measured move targets 73 to 75 with the full wedge resolution pointing at 81 to 82,000. Bear case at 15%, this one hurts. Asian refinery declares force majeure on crude contracts. Nikkei drops 5%. Japan dumps treasuries to save the yen. 10-year spikes to 430. ETF buyers who loaded 68 to 72 capitulate. Bitcoin below 60,000. Trigger watch. Hormuz physically blockaded Brent over 100 and equities correct 10 to 15%. Direct US-Iran naval combat VIX breaks 35. Hot CPI print in May. Every remaining 2026 rate cut priced out in one session. And one more data point that barely made headlines today. Gold just hit $5,148 at multi-year highs. while the dollar index holds near 98 to 99. These two assets normally move opposite each other. Both bidding simultaneously means this is not a normal risk rotation. This is systemic fear capital running in every direction simultaneously, trying to find any shelter it can. And yet Bitcoin is breaking out. Write that down. Bitcoin is breaking out while systemic fear is at levels we have not seen in years. The digital gold test is happening in real time under live fire, and Bitcoin is not flinching. Which means what you actually do with your money right now matters more than it has in months. Engines hot, safety off, let it rip. Here is the most important thing to understand right now. The narrative and the money are in two completely different places. The media says the Iran war is a crypto killer. Bitcoin is up 7% today. Wrong. The AI crypto supercycle is all over social media, TAO, FET, render trending everywhere. But capital is actually flowing out of those tokens right now. Narrative running one way, money running the other. In this garage, that gap is not a problem. That is information. And information is the only edge that matters. Where is the money actually going in crypto? Real world assets, Ondo, MKR, Link, tokenized traditional finance. The only narrative tonight where capital flows are confirming the story. Everything else is marketing. Now, the warning on this breakout, derivatives open interest just posted its largest single-day percentage increase since July 2025 as Bitcoin tested 69,400. Leverage is building on top of this move. Yellow flag inside a green candle. Real breakouts get confirmed by spot volume. If spot confirms measured move is 73,000, then 75, then the full wedge resolution at 81 to 82,000. But if leverage gets too hot a flush, back to 69,000 to clear the over leveraged longs is not a failure. That is how breakouts work. Break, confirm, run. Do not mistake a healthy retest for a reversal. Garage positioning, offense, Bitcoin above 69,000 structure is bullish. ETF floor is real. Saylor buying, BlackRock buying, energy exposure stays on because oil stays elevated. Even post-conflict shipping reroutes take weeks to unwind. Gold keeps running while DXY and gold are both bid simultaneously. RWA tokens are the only crypto narrative backed by actual capital flows right now. Defense. AI tokens, media loves them, money is leaving them. Do not chase the narrative. Solana needs 87 to hold, or the next conversation is at 77. Broad altcoin beta is dangerous. 81% of coins were red today. The risk-off regime punishes beta. Pit stop. ETH needs to clear 2,300 before it gets interesting. There is $1 billion liquidation cluster at 1,911, and market makers will hunt that level. Do not rush it. Watch Mara, Riot, and CLSK absorb the tariff news on mining hardware before sizing there. The one thing, Iran's missile capacity is reportedly days from exhaustion per Western officials. If a de-escalation signal drops in the next 72 hours, this breakout gets rocket fuel. 310 billion in stablecoins waiting. ETF inflows not fully transmitted to spot yet. Shorts blown out today, hesitating to reload. The coil is wound. But if the conflict extends past next week, the oil inflation math kills every remaining 2026 rate cut. The Fed stays paralyzed. This rally becomes a relief bounce in a bear market, not the start of a new leg. Track is drying, engine is warm, not full throttle until Hormuz resolves. Posture tonight, yellow-orange. Upgraded from last night. The breakout is real. The institutional bid is structural. Accumulate discipline, not leverage. This is the homework. This is the intelligence the street does not have. This is why you are here and not watching the news getting lied to. Smash that like button, hit subscribe, hit the bell, and share this tonight with one person who is staring at the news scared out of their mind. Tell them to come to the garage. We break it down so everybody gets it. Not just the suits. Guru Crypto Garage. Protect your capital. See you tomorrow night. Engines hot. Safety off. Let it rip.